you're looking at the fitness business, you're trying to figure out, how do I get more revenue per person? How do I actually create brand loyalty? Ultimately, all of us spend a lot of money acquiring new members. The question is going to be, how profitable is each new member we can acquire and how much long-term value?
This is All Things Fitness and Wellness, hosted by Krissy Vann. Together, we're uniting industry thought leaders and fitfluencers on the mission to inspire innovation and encourage people to live a life fit and well. It's time for the quarterly fitness business forecast, brought to you by ABC Fitness. Today, we'll review key industry lessons learned in 2024, explore upcoming investment trends for 2025, and discuss strategies for operators aiming for growth and success in the new year. Our panel features some of the industry's top names. Mark Mastrov, often called the godfather of fitness and chairman of New Evolution Ventures, Craytor, CEO of ACAC Fitness and Welled Health, and Khal Rai, president of ABC Fitness. Before we get to it, a quick shout out to our sponsor, ABC Fitness. With more than 31,000 clubs and studios, 542,000 coaches and trainers, and 38 million members in over 100 countries, ABC Fitness is the fit tech provider to the best in fitness. Visit them at abcfitness.com. I'm your host, Krissy Vann, and this is ATFW.
Well, I am so thrilled all of us have been able to join because we are currently in Las Vegas at time of recording. We've been taking part in the Fitness Technology Summit, but the conversation today is really taking a look back at 2024. It's hard to believe the year is already wrapping up, and really take your brilliant minds to give us a temperature check of what we can expect traveling into 2025. So first of all, thank you all for being here today.
We're having it.
So we're going to dive right in here and just kind of go through each of you. So Khal, we'll start with you. 2024 obviously has had both challenges and opportunities. Being with ABC Fitness, you have access to so many data points. So what has surprised you this year the most?
You know, Gen Zs, the fact that they are sustaining their ability to spend, their ability to join. I was looking at data before I joined. Year to date, 60+% of joins in the industry have been in the 30-year-old or younger, led by the Gen Zs. It's an amazing story. I think that's, to me, it's something to be celebrated, but also people have to pay attention.
Yeah, well, and I think to your point, they are going to be the trailblazers.
That's right.
They're learning from their parents' mistakes, where unfortunately we have seen such rising rates of obesity, and they're seeing their parents now live with health repercussions that are often preventable. So it's very refreshing to see.
And they're different. They're different. They don't like contracts. They want to be at will.
Yeah, well, I'm sure we'll be diving into some of that for sure. And I know my recent podcast with Mark actually covered a lot of that. And Mark, you obviously have such a great check on the global fitness industry. So what has surprised you the most?
I think it's a divergence of old school and new school. I think that we've gone back to the way I used to train when I first started, which was lifting heavy and kind of doing squats and deadlifts and the things that, blow your back out, so all the young folks can, experience the same thing we all experienced later in life, that, we blew our bodies in big ways and had to recover from it. But it's old school style. It's kind of like, I was talking to a couple of my friends who come out of the Gold's Gym world, and they're like, it's big hair, it's powerlifting, it's back to the way it once was. And so as we sit here now with a shag carpet, I feel like I'm in old school. And then there's new school, it's Ozempic and technology and AI that's combining with the two. So that's what I think is really interesting coming out of 24 going to 25.
I special requested the shag just for that.
There you go.
Just so you know.
It wasn't pink, but I knew it was
The thing is, we're in Vegas, so I just know the carpet probably has stories, but that's okay. We'll leave that there. For yourself, Chris, of course, in your business, I mean, you have Weld, where you're so involved in what's happening in healthcare. So I'm curious from your perspective, what surprised you most, because that's escalating at a rapid pace.
It really has been. I think it's really interesting to watch how many people are choosing to purchase, or rather get for free, a membership from an aggregator, either through their health insurance plan or even through their companies. So on the Welled Health side, as an example, we've seen our same brand growth at 3 times in terms of the revenue from these programs since January, which is really incredible. And so it'll be really interesting to see whether or not rather that trend continues into 2025, and how this will be either a long-term sustainable thing, or it'll be something that perhaps peaks at some point. And obviously the future will tell us.
Well, I'm just kind of sending it back to you there because we're kind of looking at the investment and market health overall. So what's investment looking like in that particular space and sector?
Yeah,
What's the appetite?
Yeah, it's pretty heavy. I mean, there's more competitors. If you look at the market now, there are more competitors for these types of services. And so as a gym or a health club or any other fitness operator, you're going to be looking at which programs do I pursue? How do I actually manage all this? How do I deal with it? How do I actually decide which ones are best for our business? And how do we navigate this? So I think from a club perspective, if you're in a market like, say, Arizona with a heavy retiree population, it's really hard not to participate in Medicare Advantage fitness programs. But in your own market, it may not be something that is worthwhile because it isn't as big of a deal where you live. So I do think investment will increase. I think from an investment perspective in the health club space, pivoting that way, every club operator I talk to is worried about construction costs. So a big trend this year has been the cost of construction and the degree to which that will lead to either consolidation or really an appetite for models that can be more easily stood up and replicated quickly.
Fair enough. And Mark, you and I just recently had a conversation where we took a dive all around the globe. But if we're just looking at the United States, as we're rounding out 2024, what is the health check of investments into the fitness industry?
I think a lot of people are sitting on the sidelines trying to decide where they want to play. And I know that there are quite a few platforms that have come to the market that have kind of stalled and decided to pull back, have either recapped their business and kept them or just kind of waited it out. And valuations weren't quite to the level that they were pre-pandemic, even though pandemic seems like 100 years ago now, kind of pushing towards 5 years coming up here next March. But having said that, I think that consolidation could be a play, but I think also raising capital is very costly right now. So interest rates should be coming down, but we've seen home mortgage rates go up. So we're not quite sure where we are. Presidential election in a couple of weeks, I think that'll settle a little bit depending on who gets in. Maybe next year it'll bounce out, but it's been a lot of capital on the sidelines, but not a lot of investment.
And what are you carrying? Because obviously you're connected to so many individuals in the health club industry.
Same thing. I think what's good coming out of 2024, because of cost of capital being so high, people focus on the basics. They kind of upgraded their clubs, paid attention to kind of being more profitable. So I think that bodes well going in. We're seeing consolidation in our customer base. Because of the cost of capital, they're acquiring, that they want to start with some membership base. So we're seeing some of that. But I think 2024 anyway was okay because we were at the back of 2 strong years. 2022 and 2023 were off the chart coming out of COVID. So we'll see. We'll see what 2025 brings about.
Everyone definitely closely watching. And I know one of the things that we've talked about a lot is that access to capital. I mean, there are definitely a lot more hoops because it's not necessarily as widely available. So how have investor expectations evolved through this year? And what can we kind of expect heading into 2025 if you are trying to secure deals?
I mean, depending where you are in your growth cycle, one club going to 2 or 50 going to 60, it's different. And so the mom and pops have been able to get decent landlord tenant improvement dollars on some sites, and they're getting some capital from equipment leasing companies, so less cash is going into their development for a one store operation. Construction costs are up dramatically, so you're seeing difficulty in finishing products sometimes to the level you want to finish it, so you got to find more effective ways to build. For the bigger box groups, cost of capital is expensive. Some are getting mezz capital, anywhere between 12 and 16%. Very, very expensive. So you have to have high belief that you can perform in your product in order to offset that kind of borrowing factor, that cost of capital. So if you have a big enough product with enough cash flow, you can probably cover it. But risk comes with any kind of a downturn should that occur. So I think there's capital out there, but it's not cheap right now.
Yeah, I was going to say, if you're a smaller operation, what can you do to try and make yourself look appealing to investors right now?
Yeah, it's really interesting. We run a health club chain of 14 clubs, so we're kind of a mid-sized operation. And there aren't very many of us left who aren't private equity funded. You look across the country, kind of that regional mid-sized chain. There's a few that are out there, and not say there aren't, but they're shrinking and they're continuing to get investment. And those that are getting investment are ones that have developed a model that can be more easily replicated in additional markets or across different geographies to command a higher multiple that these owners will typically demand. So we're seeing a lot of that kind of movement. And if you're in the space and you see, oh, wow, I heard about a deal that got done at X price, wow, I think I can get that. Well, hold your horses. You may not be able to, because have you really streamlined your operation such that an investor would look at this and say, wow, here's this opportunity I can go achieve without having to rethink my business plan. And I think that's where you're seeing some of those models get funded and potentially grow. And for the groups that aren't necessarily in that world, you will continue to see consolidation, especially in the 1, 2, 3, 4 club operators of the kind of multi-sport variety that are really, really challenging to build today, but are much easier to acquire for an aging ownership base.
Well, with you saying them having to have their operations so streamlined and being able to prove that, what would be some of the key factors, maybe top 3, that it's like you should absolutely have that above board?
Yeah, I think store design, one, like here's our model, here's how we operate it, this is the payroll, this is the labor, this is what goes into it, here's how many pieces of equipment we need. I mean, those types of things. Very strong demographic profile. You know exactly what type of markets can sustain your business. And so you can really easily take pieces off the board, say, yep, we're not going to go after that parcel. Or you're actually working with groups who can help you find them more readily. So to me, that location and actual design and operational profile is really critical.
What sentiments are you hearing?
I take the position that PE money has been good for the industry because they come in, they force the operators to be mature, right? You gotta have kind of clean financials, solid, profitable plans. And then the other thing is the emphasis on profitable growth. Because a lot of people chase growth, but are you profitable? Are you growing the bottom line kind of a little bit higher than the top line, that 10 to 15% multiplier? I think it's healthy, and obviously if you can get access to PE money, I think that's the best way to.
Yeah, well, even just being at the Fitness Technology Summit and having these really future forward conversations, and with this whole merger of healthcare, health club, I think we're headed in the right direction. Right. It just has been really tough economic times. And to that point, we'll kind of shift into the financial trends that we saw in 2024, everyone feeling those effects of the high interest rates. I know coming from the Canadian side, Bank of Canada, there's talks that we will come down a full percentage point by the end of the year. Obviously, election in the United States, so we'll see how things go. But what kind of financial strategy should operators be putting in place when they're looking at the decisions to make in 2025 when it comes to the fact that there's still a lot of instability in the economic climate? I see some nods. So
well, I would just say, from my perspective, what we see a lot of clubs doing is really focusing on the revenue per member and really trying to find other ways to attach other bundled services to the membership. So be able to offer a price point that's appealing to a large group, while being able to offer services that charge a little bit more for those who are willing to pay them. And that's happening at every strata of the health club world. It's not just on the lower price or the higher price. It's everyone in between. And we're seeing now, clubs are now figuring out, wait a minute, like how do we actually generate more return from these individuals we have and more loyalty? So what we've seen as a trend is, like you mentioned, the Gen Z population, they tend to bounce around more. They're a little less stable than, the group that owned their home at age 25 and had a couple of kids, right?
They want the buffet.
Yeah, so it's a matter of picking different places, depending on the different day of the week. So if you're looking at the fitness business, you're trying to figure out, how do I get more revenue per person? How do I actually create brand loyalty and really close the back door in terms of the attrition that you're going to have each year? Because ultimately, all of us spend a lot of money acquiring new members. The question is going to be, how profitable is each new member we can acquire, and how much long-term value can we drive?
Mark, have you seen some that have diversified themselves well to kind of strategize and change their business model a little bit to accomplish that?
Well, I mean, the market's shifted away from the middle. So you got what they call HVLP at the kind of price point 10 to 30 range, depending on your model. And then you've got this group that's kind of pushed up. Lifetime here in Las Vegas, higher end, their starting price is $324 a month. A couple of years ago, probably was around $220. So They've been pushing it up and up and up, and they're having very limited resistance. So they've gone more after family and social and, country club. So that market's thriving pretty well. And the low market, so there's some folks in between. And a lot of it just depends on the cost structure of where you're located. If you're in California, they can take your energy bill up triple in the summer just because they can. So your utility bill might be $8,000 in April, but in July it might be $26,000. And so that eats into your profit margin pretty quickly. And you don't have a feel for what may or may not be coming from wage increases, new laws, et cetera, in some states. So it just depends, I think, a little bit where you're located and how you're structured. But ultimately, at the end of the day, do the people have the skill set to take people up the ladder, so to speak, if I'm relying on my team in the facility to be able to take something from 9 to 20 to 30 to 40, that skill is kind of a lost skill from the folks in the field. It's going to have to be software driven, technology driven, and compelling driven. Yeah, it's kind of like Disney coming in and saying, hey, buy my Disney package. By the way, you get Hulu for another $4. Oh, you want ESPN? That's another $4. And pretty soon they're at 26. Get everything. And that's the game we're trying to play. But it's not $4 generally. It's a little bit more that we're asking.
Yeah. What kind of challenges or opportunities have you heard from the clients that you deal with in regards to the 2024 economic challenges we have experienced? Aside from construction and such that we
I think just to stay on that theme, it's like, talk about the kind of embracing digital and technology, right? When we were talking in the conference today about cold plunges, like technology, you got to embrace it in everything you do. Think about cold plunges. Don't you want to schedule it? Don't you want to know how much time is being spent on? Don't you want to create education on it? Technology is actually a differentiator. You got to have it. At some point, if you don't have it, you're probably at a disadvantage. The other thing is embracing the in-club, out-of-club experience. Because I think pre-COVID, we were all kind of preaching, hey, is there a day where kind of you bridge the outside and kind of out-of-club, in-club? COVID kind of changed that. Stay with it. Because I think digitization is key, and create digital membership, bundle it, are opportunities, and people are raising prices. That's what we're seeing in the portfolio. People are actually going bi-weekly, they're changing prices, they're trying to drive higher revenue.
Well, and when you say the digital and having them both on and off, I think just making sure that experience is hyper-personalized as well is something we're hearing time and time again. And it's interesting because I think we were having the conversation. I mean, the hospitality industry is something that does it so well.
Right.
How is it that the fitness industry still misses the mark there in a big way? I mean, actually, why is that?
The conversation continues, but first, a quick note from our sponsor. Discover ABC Ignite Gym Management Software and learn why it's the trusted solution for more than 8,000 clubs and 24 million members. Learn more at abcfitness.com.
Yeah, I think it's hard because we all do things so differently, but we all think we do it the right way. So we all have our own way of doing it. It makes really people in Khal's position very difficult for them to design products for the entire industry, right? It does create an advantage for the bigger players who can really afford to invest in technology and be wrong a little bit, but still move the trend line up and to the right. What I mean by that is if you're a smaller group and you're looking to invest in technology, well, specifically like custom development or your own native app or these kinds of things, as a percentage of your overall revenue or overall profit, that gets real expensive. But if you're a large company, you can do so in a way that creates nice differentiation without necessarily having to betray your own core values or betray exactly what you want to get done. So I do think that's going to be really interesting to see how the technology forward groups move things along. It also creates more opportunity in the technology players for the industry to develop new products and services that potentially are, say, acquisition targets for a group like ABC, right? Because there's always going to be that new person who comes with a great concept that becomes, really takes hold in the industry and drives everyone forward. The other financial thing I was mentioned was labor. Labor continues to be a massive problem in the industry. And how do we find and retain great talent, to Mark's point, that can actually deliver what we want to deliver and is really enthusiastic and passionate about the industry? The nice thing about raising our dues and raising our price points is now we can afford to pay people properly in our industry. I think many of our industry are chronically underpaid for the value they provide. I think we've all said that, and hopefully this acceleration of price allows for maybe more normalization of the wages we can pay people.
Well, this is actually interesting because I was just speaking with Chris Smith today.
Mm-hmm.
He's in Barcelona right now with the Health and Fitness Association, but he's with Fitness World Canada. And he had the opportunity to tour a bunch of gyms out there. And a couple of concepts actually are staffless gyms. So I guess I find it interesting because on the one hand, we're saying, greet your member at the door if you know their name and want to give them this personalized experience and how valuable that touch point is. What are your thoughts about some of these more innovative strategies that are coming out? Do you feel like there's value because it's hyper modern? So if you're a Gen Z consumer, you might find it cool. There's no right or wrong answer, but I'm just curious, what are your thoughts on those types of concepts?
I'll tell you, like one concept we're spending some money on just to kind of study and understand is, could you imagine a store with no front desk? So you come in from geofencing in the parking lot, we know you've arrived, to you walking in and really just eliminating the need to check in with a desk. right? And no turnstiles, eliminate the friction. And how do you do that? You leverage technology. And more importantly, you just take everything and elevate it. So technology-wise, you lift the need to have a computer on the front of you, a barcode scanner. You just lift it up. And, it's people say, well, do you lose a touch, right? But then, hey, float your staff as people are working out. But just in large cities, shrink the footprint a little bit so you don't have to pay as much rent. I mean, it's just the front, store without a front desk is cool. So we're spending actually some research money on that.
Well, we look forward to when ABC Fitness releases this research so then we can dive in. But Mark, I know you travel so much and have the chance to see a lot of concepts. So have you actually witnessed this type of thing in action? And have you heard from some operators that are opting for these types of models over how it's been received by members?
Well, one of the biggest groups in Europe is Basic Fit. And they'd run it that way for a long time. So they're 1 to 2 people maximum staff-wise per store. And it's, thumbprint, biometrics to get in through a cage system like you might see at a subway in New York, where it spins through. You can't get access unless you use your thumbprint to get in, and you have access to the facility. But, it's different by market because in the U.S., we're used to kind of hands-on, but we're starting to see more and more now self-governing. You go to an Amazon food location and they basically don't have anybody working. You just grab whatever you want. They kind of 400 cameras on you and you basically take the stuff out.
Nothing creepy about that at all.
Yeah.
Way in the future.
Grocery stores, self-checkout. So we're heading towards more what I call loneliness. And so all the surveys that have come out in the last 4 to 6 months have been, this country's very lonely. And we're trying to push towards more things that you do by yourself without anybody else. If you don't talk to anybody. I think kids were raised this way. A lot of, kids my kids will bring people over and they'll bring their friends over, and a lot of them don't say a word to you. Occasionally you'll get somebody who's got person say, hey, Mr. Mastrov, nice to see you, but generally it's like a nod and they're not. And so it's a different kind of world that we're living in right now that we're heading towards, and I'm not sure where it'll evolve to, but a lot of people like service, a lot of people like hellos and goodbyes. I think it's important. If I go to my facilities and say, we're not having a front desk anymore, they're all gone. And we're going to use a palm reader like Amazon to check in, and ABC's written the code for it. And you just wipe your palm, you go in. My team will be, no, we're not doing that. They'll fight me in tooth and nail all the way. Like, yes, we are. No, we're not. You won't do it because they just are so comfortable with the interaction that you have with your members. So I don't know if the U.S. can get there or not. There'll be some folks that try it and some folks that do it. Like Anytime Fitness, 24/7, swipe in. A lot of times there's no staff. People like that. But there are a lot of other people who kind of want to be acknowledged. And not to continue talking here, but if I take my 89-year-old mother, what's the most important to her is acknowledgement when she walks in the restaurant. They go, hey, Mrs. Mastrov, that's like makes her day. Now, they may not know who she is, but they saw her name on the reservation, but in her mind, they know her. That's right. That's what gets her excited. I think a lot of people are in the same mindset, but in time will tell.
Well, and to your point, we know that there's a loneliness epidemic. The Surgeon General declared it, and there are very real health repercussions to loneliness. So to your point where you're like, we don't know where this is going, I can't imagine it's a healthy place. And I know that we've had a lot of conversations that gyms are tremendous hubs as third spaces. I live in a well-populated city that is lacking third spaces to a really large degree. So I think we kind of have a responsibility to give it ourselves.
Well,
social aspect.
Take streaming services. I don't know if you watch those, but Netflix will put a movie out and it'll have billions of minutes in 30 days. Billions.
What does that tell us?
And I'm like, okay, what are people doing? They're sitting on the couch watching, Trump and Harris go at each other and catching a movie at Netflix and going back to the loneliness of being by themselves. So there is part of that that's happening. I do think that, the gym spaces we've always talked is really the third place. That's kind of where it's at. It's not Starbucks, it's gyms. Right. And that's where people go to find community and interaction, and they'll be able to stare at people, go, I'm in better shape than they are. I feel good today. That whole approach, even though they might be.
To that point, Mark, is the kind of back to the Gen Zs. Know your customers. Who are you targeting? Because, if you're targeting the boomers population, you can't say, hey, we're going to take the front desk. I'm not going to say how long. It's just, I think you got to know who you are.
Yeah.
And that's, and can you create a world where it's, can you tailor to kind of different segments? I don't know.
I believe in the socialization piece too. I think the way we run our clubs is very much designed around that, because I think people, whether they believe it or even recognize it, they want that. I do think a lot of the Netflix minutes are spent on the treadmill with their phone, crushing my Wi-Fi.
Here you go.
Add that to the cost
Yeah,
expenses.
here we go. Put it there. Yeah, exactly. But I'm happy to have them in, right? And I think that, for anyone who's been following music for 2 years, Taylor Swift, right, has all her concerts. How many people line up outside of the concert venue just to hear it, even though they're not in the stadium? People want to be around each other. They want to be part of shared experiences. Being in a class that just absolutely kicks butt and is so fun and everyone has an endorphin rush, having been through that, or even a road race if you do those kinds of things, that feeling of being in that shared experience with others doesn't go away. I think it's part of innate human, kind of biology to want these things. So while I do believe there's a concept that is going to be service, agnostic, and you're just going to walk in, swipe, and go and do your own thing, I think that's great. I think for brands that are really believe in that and they have a customer who wants that, I think we should provide a product for that. On the other hand, I don't think that's the only product. And what's great about the fitness industry is there's a million ways to quote unquote skin the cat here. And so what I love is everyone can self-select what they like the best. So I would see those European models coming over to the US with more frequency, especially as a club owner looks at his or her inputs and thinks, all right, where am I going to cut cost? I got to have rent. I got to have equipment. I got to have a physical space. What can I cut next? Right? And in California, it's not utilities.
Yeah, well, you try, but what's interesting is you've got Pure coming in potentially to the U.S. now, acquiring links from that process. And Pure is a very heavy tech company. They probably have 150 people in their IT department, and they work on a lot of cameras and a lot of staff.
Yeah.
So that'll be an interesting test to see if some of the Europeans think that, hey, the U.S. is the same. We can basically come here and operate the similar ways that we do in Europe. And Europe's different because the neighborhoods are different. They're more, we talked about in the last podcast, I kind of call them shires, take it from Lord
Still
of the
haven't
Rings.
seen Lord of the
Everything's
Rings.
very
so
small.
I will.
It's difficult to find space and people walk a lot. It's just not like the US where we get in our car and we drive down to the local gym. We basically walk or take a train or a bus or something. It's very different. Maybe take a bike. But at the end of the day, it'll be interesting to see. I think, like you said, there's a little bit of everything here in this country, but I do think people like interaction and they do enjoy being able to come in and be recognized.
The conversation continues, but first, a quick note from our sponsor. ABC Ignite transforms fitness management, streamlining operations, enhancing revenue, and delivering profound insights. Built for innovative club operators, Ignite ensures efficiency and member-centric experiences. Learn more at abcfitness.com.
Well, I like that this kind of naturally segued into a little bit of trend forecasting as we head into 2025. And if we were to analyze 2024, the conversations I've had with almost every person I've had on the pod, GLP-1s inevitably come up. Just as we've been rounding out the year, endless conversations around Pilates. So I know some of these are going to continue as we move forward, but what conversations do you think will dominate in regards to where investment dollars are being attracted and what's going to be really growing and explosive in this industry? Where is the change going to happen, Khal?
So our industry is simple in a way. It's all about acquiring a member and retaining a member. So on the acquisition front, an engagement front is kind of market automation. We've had it in a while, but it's kind of to the next level now in terms of just knowing everything about the members. And you combine that with data aggregation. I think it's all about knowing people's habits, tendencies. There are actually platforms that actually can take that and combine it with social activities. So you could really know a lot about your members and tailor to them. And I think personalization is the last one. I think we need to personalize everything about our industry, including things like when should we build a member on? Is it the day they join? How about the best day for them, which is maybe the day they get paid or maybe the day after? I think hyper-personalization is the name of it.
Asking a curious questions,
Absolutely.
using the data to
That's
actually
right.
achieve that, because I think in a lot of instances, sometimes it's data for the sake of collecting data and then it's just underutilized. Because to our point earlier, I'm like,
Yeah.
there's other industries that are doing it very well. I don't quite understand why there's such a lag in this space, but to your point earlier, you're like, maybe we've just all had different ideas, so we haven't culminated to kind of move in that same direction. What do you think is going to dominate, Mark, as we're heading into 2025? The conversation that I'm going to have over and over again through the year, what will it be?
I I really think if you're talking United States, which is what we're focused on, I think it's a lot going to come out of the elections. I don't think there's an answer today unless we say, okay, Trump, then we say Harris. I do think that, there is a lot of trepidation on the opposite group for each winner. So if Harris wins, the Trump side's going to take a different kind of position. And if Trump wins, the Harris side's to take a position. I think there'll be some consternation around that before we kind of wake up in January, maybe February after inauguration. So, okay, where are we going and what's really happening out there? I think that, if you look at the U.S., it's been commoditized to a certain degree, the health and wellness space. And now we've got healthcare coming in and requiring huge discounts from us to do it. You've got Gym Pass showing up with corporate accounts trying to dominate the corporate environment. Say, hey, you got to let my person in. I'll give you $6 for a workout. You've got people that are, I call it the going out of business sale and then coming into business sale, the pre-sales that get 2 months free, join my club. I'm going out of business, so I've dropped my rate from 30 to 20 to 10 to 5. And so it's a lot of kind of this really difficult thing for me to see what's a clear picture going forward until we kind of come through Q1 next year. But I do think next year is a watershed year for our industry. And I do think that there will be a shakeout and there will be some brands that will emerge with strength and growth and they will dominate. And there will be some brands that are going to really think about, is this for me as a time just to get out, which may lead to consolidation and growth. But I look at the crystal ball, it's very foggy for me to say what do I think is going to happen in 25 until we get through Q1. Come back in March, maybe I have an idea. You guys have a better idea. I can't figure it out right now.
Same. I don't think it has some clear picture. The GLP-1 thing is not going away, clearly. And so as health club operators, at least I would think that we want to find out, well, how do we relate to this population in a way that is efficacious? I think there's a lot of noise around it. So what do you do in such a way that allows you to help this customer, this member, but also in a way that doesn't put you at any kind of risk and liability, because now you're dealing with somebody who's on medication and going through a process, right? I do think, as Mark said, the election is going to be influential. And I also agree with what Khal said, related to personalization. I think on the marketing and lead gen side, absolutely. I mean, we know so much more about everybody. And our industry has actually been very behind that. Like Caesars, where we're staying for the convention, knows that I'm not the person they need to worry about to gamble a lot of money in the high limit area. So they're good, right? So but there is somebody that they know before they check in, this is the person I'm going to bring in. So what are we doing as an industry? Well, we're not doing a whole heck of a lot of that, to be perfectly honest. Overall, I expect there's more investment going to come in from the private equity space next year. There's so many trillions of dollars sitting on the sidelines. And while we're not an incredibly mature industry with a ton of big players, changing around, I do think as the groups that, do have club ownership, how many club owners are getting to the point where they're looking for an exit or transition? I can tell you as a father with children, none of them want to be in the health club industry because they were at home during COVID and saw what the hell it was like. And so they're like, yeah, we're going to go ahead and take a pass on that, I think. It was a challenging thing. So I expect that you're going to see people looking to make their exits as interest rates go down. Cost of capital goes down a little bit, and you're going to see in 2025 more people looking to run processes around their business to potentially either exit or acquire others.
Yeah, some mergers and acquisitions
Absolutely.
building uptick, hey?
Absolutely.
Yeah. Well, as we look at GLP-1s, because I do want to address that with you, obviously we've seen some larger players enter the space fully, like Lifetime has Mura, Equinox as well, made their announcements. If you were a smaller operator, is it worth entering that space? And what questions should you ask yourself before you get there?
Gosh, obviously you're going to have members just by looking at if you're a club of any kind of size, you're going to have members who are using these drugs. And I would look at this as a way of how do we support that journey in a way that is within our own swim lane. What I mean is that you're not all of a sudden going to become a medical clinic or a medical weight loss center and do all these services if you don't have really the bandwidth to really develop a proper program. My concern is you're going to get people who are looking to support this, see this as a pot of gold potentially, and do things that actually harm the industry because we're out in front of something that we don't necessarily quite understand. Like if you ask folks now, how long do you need to be on GLP-1s? Is it forever, or can you wean yourself off of it? You will get different answers, by the way, on that one topic. How are the compounding pharmacies going to play in this, who are offering the cheaper versions of these? Clubs are going to start reselling these on behalf of pharmacies to their members. So I do think it's a little bit messy, and unless you have a pretty good legal department and a really, really clear concept of what you want to do, I would just move cautiously. in this realm. I think some of the bigger players have enough horsepower behind it to figure it out. And if you see what they're doing, it certainly provides you a nice roadmap to follow potentially for success there.
Yeah, do you think, I mean, you may or may not want to answer this, but those that have stepped into the arena, do you feel that that was executed well? Like, is that the roadmap or the blueprint?
Well, I mean, statistics show, and I can only quote what I read, so something can say it's fake news, but statistics show that 35% of people on GLP-1 opt out within 30 days, and 75% are out within 6 months. Wow. There's tremendous side effects. I have friends who've been on it. Some are like champs, no issues. I had somebody very sick. I have a lady friend of mine who was put on GLP-1 by a group inside a spa who didn't have a lot of credibility, but pushed it on her. She took it. She was a cancer survivor. She got very ill and ended up in the hospital for a week. So it is early days and people are still trying to figure it out. I think for Lifetime and Equinox, there's a big PR play because they're in every article right now. Hey, you can go to Lifetime, you go to Equinox and get GLP-1, but you can go anywhere and get it. On the street corner. I could probably get out front here in Vegas.
Without a doubt.
What it does for you safely, how does it work? Obviously, you got to have strength training with it. There's a bunch of byproducts. Doctors are sending you into fitness. So it's word like, hey, GLP-1 is going to hurt the fitness industry. Now it's like, actually, it's going to be a boom for the fitness industry. So it's all early days, and there's a lot of these other drugs coming very quickly now that are going to be pill form, $20 a pill versus $1,500 a month. So in time, it's great, provided the side effects aren't hurting anybody. You know, and so we all took these amazing shots during COVID, and we're all wondering, those who did take it or were forced to take it or had to take it to go out and travel, all wondering what the side effects are. And I was talking to friends the other day. I mean, I've lost more people in my network in the last 5 years than I lost in 120. We had young people in their 30s and 40s having heart attacks and passing that you would never think could happen. So it's nothing to do with COVID, of course, but you wonder what the hell is going on out there. It's an issue. So long-winded answer, I think it's really interesting, but do we want to get into the space? I mean, I have to talk to Brahma, Karate, and Harvey's feedback to say, hey, how's it going? Yeah, I haven't had that conversation yet. I guess I should call and say, is it amazing you're selling millions of dollars per gym, or you don't get anything? Right. It's just PR. Hard to say.
The way I think about it is we all talk about the 20% participation rate. So if this brings in yet another segment of the population that's not participating, great. So if you're a mid to small operator, build programs around it. Hey, you're using GLP-1, come build muscle mass, come work out, create kind of advertisement. Let the big boys cannot do that kind of
With
medical,
the big legal teams.
right? And then worry about it. The healthcare system will take care of it. But I think, yeah, if that lifts participation rate to 22%, then great. Come on over. Be open.
Well, as we start to round out the conversation here, anytime we're heading into a new year, generally there's a lot of reflection. And as we've addressed, there have been some really real challenges for the fitness industry. I know we were saying hard to believe, pandemic will have been 5 years ago, made it through that. And then all of a sudden you're hit with really expensive real estate, your electricity bills, your labor shortages, and the rest. So what are the top lessons that operators should take from 2024 that they can perhaps learn from heading into 2025? Because that's the thing. Sometimes there's unavoidable elements that happen in our lives, but there's always a lesson to be learned from it.
Yeah, yes, great. Well, yeah, I think for 2025, given there's a little bit of uncertainty, I think a lot of uncertainty, I tend to agree with Mark. I really don't know exactly where to put things. I felt really good about the last 3 years as nice high growth years, and I talked to our team, and I always say that the time to actually, really batten down the hatches of when things are going well, and really to understand, okay, don't get too excited, don't start spending all your capital going and doing and pursuing every shiny toy that kind of just bounces down the street, because inevitably we're going to be back in a position where we're overextended, right? I guess my view is move cautiously, move expeditiously, and then really, really stay within your swim lane as a club brand and operator. Like, don't try to be all things to all people. You're generally speaking going to fail, right? I think do a few things very, very well, focus on those things, and you're going to have a better chance of success. I think that, in the health club world, I've been 20 years now in health clubs. Which trends are going to be long lasting? You think about yoga as a great example. 20 years ago, how many clubs were offering yoga versus now how many do that offer group programming? If you think about Pilates, obviously continue to have a great resurgence and backed up by some recent investment in the space, right? So which are the ones you want to jump onto? and which ones you can reliably think are going to be trends, not fads. I think about this at the trade show every year, where there's always a new type of equipment that needs to be prioritized. Basically, it's everything that builds your glutes. Apparently, now everyone has to have these options. In 5 years, I guarantee you there'll be fewer, right? There will be some other new thing that someone comes up with. So I would just look as a club brand, invest wisely in those things that are going to have staying power, and try to avoid chasing everything that comes up, because I guarantee you some of these will be gone in the not too distant future.
Well, and in the 20 years, you've seen this happen time and time again.
Oh, yeah.
So it's like your history often dictates a lot of the future. So you nailed it there. How about yourself, Mark? What would be your advice or reflection?
It just depends what hat you're wearing. I think that I would get very cozy with my lawyer or my accountant. I think that there's a lot going on depending on the state you're in, from a litigation standpoint, potential litigation standpoint, new laws being passed, the click and cancel law that the FCC passed is probably going to get challenged in courts and end up at the Supreme Court at some point. The POGA lawsuits in California, where class actions happen every week, depending on who you employ, minimum wage breaks, all these things that are kind of kicking in. So be really good friends with your lawyer, and then make sure on the accounting side that you really understand what the ups and downs can be looking like, to make sure your budgets look really good and your eyes wide open going into 25 to what things may come. Canada got hit with a 67% capital gains tax. Don't know that anybody was planning on that coming in. But when that happens, there is a view that if the Democrats get into office, that they're going to push for a 40%, cap gains tax from 28 to 40. And states like California have 13.5, and so you could see a delta in the way you think about exiting, because if you're going to sell your business next year, you might be faced with a 55 to 60% kind of tax bracket, and you might say, well, shit, I'm just going to keep growing.
Right.
And so there's all this stuff going on. So I think get tight with your accounting department, your legal department, and then your tech guys. You're really, really close to your tech guys. Make sure that you're listening to them as they see trends, as they see collection rates, as they see failure, as they kind of spend time with you. I think it's really important to spend time on that side of the house as well. Do that, and then stay focused, like you said, on your core business and the way that you operate. Don't get too wide, too crazy.
Well, from that perspective, Khal, and the tech perspective, what would be your advice, offering, or reflection for 2024?
First, I think the 2024 generally, people say it was a tougher year. I'll tell you in aggregate, if I look at the portfolio of ABC, 40 million global members, 30 million North American members, net, our clubs in the network added members. So that's a positive. Now, on the same store basis, it was down. It's just all the way it is. So to me, I think naturally people focused on what they can control, best member experience of the club. Going into 2025, from a technology point of view, one thing I tell the team all the time is our job is to listen to kind of what Ford said. I need a faster horse, and we need to go build a car. So we, just like you need to listen to us, we need to listen to you. And sometimes this industry, I spent 20 years in healthcare before I moved to fitness 6 years ago. It's amazing similarities. They don't tell you what's broken, what they want. They tell you, go do it this way. And you're like, okay, what else? Tell me more. And then you find out, okay, they don't need a faster horse. We're not going to go invest in vitamins. We need a car. And that's a different skill set. I think we need to spend more time as vendors kind of figuring out what do they really need, and share as much of the insights. And we at ABC, we publish it. We want to share it, because I think it's an obligation we have, so we can help the industry and help each other out.
Yeah, it's like quartering, I'm sure you guys know the guys at Roar.
Yeah.
So they have amazing data. So I don't know if you've worked with them at all, but if you get with Tom and Greg, it's sit down and go through, what have you guys learned from the consumers? They've got 260 million data points from people in the U.S. that they punch all this data from. And it's really interesting, as you kind of point out.
They know everything about
They know
this,
everything.
right?
Yeah,
absolutely.
So that's
They know where you shop, where you live.
It's back to that point earlier. They're the ones that can tell you what's going on with the consumer, and your member. But there's groups like that you can partner with and work with that will give you good data about your member base and then the facility, and then also what's outside the facility.
The conversation continues, but first, a quick note from our sponsor. At ABC Fitness, we turn the vision you have for your fitness business into reality. Discover our technology solutions for personal trainers, coaches, fitness studios, and traditional gyms and health clubs at abcfitness.com.
That was a good point to healthcare there. We touched on it a little bit. But I do think in 2025 and in 2026, you're going to see essentially this buy-up type situation where you're going to get this baseline level of membership that these health club folks can provide to you, and then consumers will pay extra to get the services that they would want. I do think that's going to continue to be a trend, and driven by the largest payers in the industry who are looking to control cost. I also will see, with the obesity trend, especially here in the U.S., you're increasing unabated. The question is going to be, what other services can clubs provide in order to essentially supplement the healthcare space? It has been super challenging for most clubs to participate because it is hard to be, speaking of staying in what you know, it's hard for a health club to be a healthcare center. It really is. It's hard, you look at some of the groups like CVS and others who've tried to do it, who are now kind of retreating for some of these efforts, right? Amazon and others. It's a challenging business. I do think, though, with what we do in our product, there's no question that through physical activity and nutrition, we can have a massive impact on healthcare. Everyone knows that. It's a question of what little pieces might get unlocked. I would expect that you're going to see that trend continue to push forward. How it comes out, maybe that's a Q4 discussion.
And will big pharma will let us do it.
Yeah.
But the big one is, so I want to ask a question. If you're rightful president, one or the other, not picking a side,
Sure.
What's the one thing that you would say to the health and fitness industry to get their vote?
Yeah, to the health and fitness industry,
How many people did you just quote were fitness members in the United States?
20%. You have to incentivize that behavior.
Well, yeah, I mean, we think there are 75 million. We have 30 million of them, and they have a voice, to your point. And to me, I have to tell you, pass the Fit Act, man. Just pass the Fit Act.
100%.
I was going to say incentives, right?
Yeah.
Incent people to do it,
Yeah.
right?
That's right.
And if you drive incentives, then you can drive behavior. And
I
ultimately,
think-
we don't incent exercise enough in this country.
That's right. I think if one of them came out and said, we're going to basically let you pass the Fit Act, and we're going to let you basically have a tax write-off for your gym memberships.
That's right.
They might get an extra few million
That's
dollars.
exactly right. That's true.
I thought that'd be a good thing for us to push.
Well, and it also is proven that it would be effective for the population because I've read so many studies on incentives, and every single one of them has shown lasting change in human behavior, even after the incentives were removed. So you are able to instigate that habit building, but we know you can market to them a million different ways. It hasn't been effective in getting that other 80% through the door. We have to think of this differently, and we have a population that is exceptionally unhealthy. You just need to look around. And it's costly. We know it costs billions of dollars. So I'm like, it all makes sense to all of us. Yet here we are. There are different powers at play. We're going to round out the conversation here. It could be one word or one sentence. I want to know, when you're looking at the industry, what excites you most in 2025, whether it's something that's emerging, a different modality. Maybe you're like really into the glute machines and you're like, glutes for 2025.
I think we haven't talked about it here. I think AI is going to be amazing for the industry. I think it is, and it's the basics. I'll give you one that I learned from a client of ours. We talk about AI in terms of programming and coaching and all the sophisticated stuff. What's the number one thing we want in the industry? We want you to get in the gym. How about AI so we can clear your schedule and make sure we show up to your group training on time? Just the simple stuff that AI can enable that pushes participation. I think that could be tremendous game changer for everybody.
Khal, I would have been disappointed if you hadn't picked something tech
There
related,
you
so
go.
well done to you. Art, what's this?
I would have said AI is my number one for sure. I'd say my number two is pelvic floor.
Yes, I remember you brought that up in March as well, and we were kind of having an offline discussion, and I'm just like, that space is just so fascinating in regards to the different femtech, and nobody was having conversations about incontinence for women after pregnancy and things like that. And now you have influencers that are going on being like, this is a really real impactful factor of life. Why is no one talking about it or building things to help us walk through that? Fitness industry has a huge opportunity. So well on board with that. How about you, Chris?
Yeah, so I kind of went a different direction, which was more around the idea of opportunity, right? You mentioned 20%. Like, we have this huge opportunity. The question is going to be all the different tactics we use to elevate them. And I think about things like, how are you actually as active? As a parent of 3 kids who play sports, I can tell you it means a lot to have them active. And where that comes down to me, ultimately for them is as much physical health as mental health, right? How do I activate the seniors who are lonely? I mean, there's this great opportunity out there for us. I just feel like if we start really, really diving in, not stop worrying about, what offer we're going to have next month to get enough members in to meet our goals. And we start thinking about what kind of long-term business we run, what kind of change we're going to make in the lives of our individual members and guests, I think we have a better opportunity to succeed. Because I think we're not so focused on what's happening in this quarter, this month, this week, all of the goal-based fitness selling we've all done, right? And really about how do we create societal behavior change, which then ultimately, I believe that if you change a life as a business, you are much likely to keep that person as a long-term customer. And so I really think there's a huge opportunity for our industry to achieve that.
Well, I want to thank the 3 of you so much for carving out the time. I know it's busy every time we're at events like this. Very important night because, of course, Mark, you're being recognized tonight at Augie's Bash. So we have to make sure that we all get ready for that. But thank you so much for sharing your expertise as we head into 2025, which, yes, there is a lot of uncertainty, but every single room that I have been in with these brilliant minds in the industry that are at the forefront of these large companies all seem very aligned and collaborative in exactly what you're touching on there. And I'm like, the power of recognition of that, I think, is where people will seize that opportunity. There is more of this common bond, common goal, and the fact that people are willing to idea share to help us get there, even better. So thank you for being part of that momentum.
Thank you.
Thank you for having us.
This episode was brought to you by ABC Fitness, where they turn the vision you have for your fitness business into reality. Discover their technology solutions for personal trainers, coaches, fitness studios, and traditional gyms and health clubs at abcfitness.com. You've just listened to the All Things Fitness and Wellness podcast, hosted by Krissy Vann. Be sure to hit like and subscribe. We have new podcast episodes weekly featuring industry insiders and influencers. Together, we're on a mission for everyone to live a life fit and well.